The Green Sheet is a financial publication of the MWRA Advisory Board. This summer installment reviews the financial results of fiscal year 2015 and the future impacts of this information for the authority and its member communities. The review will cover the capital or CIP spending by major program category and life-to-date spending, which covers 30 years of MWRA capital spending from 1985 through 2015. Additionally, the budget, or CEB, will be reviewed by major program category and will look at the final FY15 revenue figures for the authority and trends to keep an eye on. The future impacts of this review are mainly seen through the defeasance account strategy, which will be reviewed at the end to wrap up this financial overview. Starting first with the CIP, the MWRA employs a 5-year spending cap for which FY15 was year 2. The cap spans FY14 through 18. The baseline cap for the 5 years is $791.7 million. The FY15 projected spending for the baseline was $159.1 million, and the actual FY15 spending across all major categories was $103.6 million. This is broken down between wastewater, with $75.4 million spent in FY15, waterworks with $22.7 million spent, and business and operations support, which spent $5.5 million. The life-to-date spending in these categories illustrates clearly that the first 30 years of the MWRA, with almost $8 billion spent on capital projects, has focused primarily on the wastewater side, but this historical spending is directly related to court-mandated projects which have now reached their completion, including CSOs which have cost nearly $885 million to date, and residuals with about $173 million to date. With the major work being accomplished in these wastewater categories, we expect the capital improvements on the water side will receive increased priority in the future capital spending of the authority. Moving now to the budget side, the year-end budget versus actual spending presents a good news story for stakeholders, as direct costs, indirect costs, and capital financing all contributed to lower than budgeted spending. The capital financing figure shown here reflects a transfer to the defeasance account, which will be discussed shortly. Additionally, at the bottom in blue is the total revenue, which came in higher than budgeted by over $3 million. The major driver of the increased revenue comes in the category of other, essentially meaning one-time revenue, so it's not of great importance in terms of looking ahead. Unfortunately, one previously predominant revenue stream is beginning to dry up, and that's interest income. While relatively on budget in FY15, the trend in the last decade has not been positive, as a former source of non-rate revenue has decreased drastically due to the low interest rate environment and the continued release of reserves to offset rates. It's a reason that the Advisory Board continues to strive for other sources of non-rate revenue, looking to offset what ratepayers have to cover with their water and sewer bills. Breaking down the expenditures in the major categories, direct costs are broken into two sections. First is personnel costs, and second is all other direct costs not associated with personnel. The most interesting note from FY15 for personnel was overtime spending, which came in almost 25% over budget. This isn't exactly a mystery, as January and February of 2015 saw historic snowfall in Massachusetts and required a great deal of extra work for authority staff. For the other direct costs, utilities was the most interesting category in FY15 as the market for diesel fuel bottomed out, reducing expenditures for the utilities line item. These low prices affected how FY16 was budgeted, though these markets are often volatile, so a certain degree of conservatism is always used for budgeting. For indirect costs, again a positive note in FY15, with only 98.1% of the budget being expended. Of note is the FY15 pension contribution, which helped the MWRA pension fund reach virtual full funding, and future contributions will now decrease significantly, though this will be offset partially by the beginning of contributions to the newly established OPEB trust fund in FY16. Moving finally to capital financing, FY15 was another great year for the defeasance account, as variable rates were again lower than budgeted. This table doesn't show the true impact because of offsets and other line items, so let's review how FY15 impacts future years. The defeasance account strategy, developed in cooperation between the Advisory Board and the Authority, has been working to perfection. It works as follows. When actual debt service expenditures are lower than budgeted, the savings are used to prepay future debt service, ensuring that any dollars saved now go to offset future rate requirements. In FY15, $26.8 million was transferred into the defeasance account. The primary driver, as usual, was variable debt, as interest rates have been very low. Next, the actual prepayment is in the form of a defeasance transaction. Taking the $26.8 million transfer from FY15, plus funds from FY14 and funds from escrow and earnings, a total defeasance transaction of $31.5 million will prepay future debt service, saving the authority millions in additional interest that would have been paid if the bonds were allowed to go to maturity. One may say this sounds convoluted. Why pay future debt service with current savings? The answer can be seen in the big picture. 3 years ago, this rate projection showed huge rate increases for FY17 and 20 as debt came due, but now, because of the ongoing defeasances, FY16 through 20 are projected to have rate increases under 4%. By continuing the defeasance account strategy, the goal is to have all rate increase projections be under 4% and preferably much lower between now and FY22, when debt service is set to peak and then decline. FY 2015 built on what has been a good few years financially for the authority. Because debt service drives the authority's budget and subsequently the rates, efforts to pay down that debt at an accelerated pace will be beneficial to ratepayers for decades to come. For any questions, please visit our website at www.mwraadvisoryboard.com or contact us directly.